Taxes are on everyone's mind with all the talk of pending possible tax cuts, and notwithstanding those potential changes, it's time to talk about your taxes. With us now to do that, Michael Connett of The Savvy Investor. Michael, thanks again for being here.
Good morning, White.
We hear about it in the news constantly now.
Lots of excitement.
Some tax changes afoot, but what should we be thinking about as we plan this year, like probably every year?
Well, first and foremost, I think the word planning is important. Too often, this is one of those things we put to the back seat and we don't really worry about until tax season comes along. And that's than just preparing taxes. And you can, quite frankly, you can train a monkey to put numbers on a page. You should be planning. You should be sitting down with a preparer year-round to make sure that you're in a position to pay the least amount of taxes legally possible. And that takes planning from the get-go.
And that brings up the point of it is important to work in some way, shape, or form with a professional, with a tax planner, correct?
Right, right. So in Maryland, we actually have some rules involved. If you're not an enrolled agent, a CPA, or a tax attorney like I am, you have to be licensed. You have to be registered with the state of Maryland. So certainly if you are working with a tax professional, you want to make sure they're registered in the state. But from our perspective, where the planning comes into play, why it's so important to sit down with the planner. We had somebody come, we've been doing television for years, and we had somebody come in from the show a couple years ago, and it was interesting. He was an engineer from Grumman, getting ready to retire. And if you can imagine an engineer, he had Venn diagrams and charts to go all over the place. And he was going to take $6,000 a month out of his accounts to retire on. He spent $1,000 for taxes, $5,000 left over. And what we did was we sat down with him and we looked at where he was taking money from. And this is where it's important. We looked where he was going to bring his money in from, and we made adjustments. Just instead of taking it out of this account, let's take it out of this account. And what we were able to do is get him that $5,000 a month tax-free. You know, another example, we just had a woman come in the other day, and it was amazing. She had been working with a tax preparer, clearly, and she had sold her business, and she had paid a huge amount of state income taxes. And the financial planner that she was working with had invested all her money, even though he knew she had paid this huge tax bill, and never talked to her about the tax implications of this tax payment she had made. The preparer never said anything, so when she comes to us, now it's too late for us to do anything, but when she comes to us, she's got $125,000 negative income. So imagine that. We could have converted an IRA into a Roth, $125,000 tax-free, but instead we lost $125,000 value because she was working with a preparer instead of a planner. The advisor she was working with didn't understand taxes. That's why it's so important to sit down with a planner.
You have to choose that person carefully. You
Absolutely.
were saying you're here on our board in the state of Maryland, and you know it's just important to choose wisely when you have someone helping you with those critical, huge expense in our lives. We don't realize
huge.
Federal and state tax and beyond.
It's huge, huge. And, you know, we only have a couple months left, but there are some things you can still do, notwithstanding the changes that we anticipate coming. I mean, you should look at your HSA, make sure you fully funded it. To the extent you can fully fund your 401k, make sure you've done that. If you have a flexible spending account, you know, those accounts that you put in pre-tax dollars for childcare and stuff, make sure you're spending it because it's a use it or lose it. If you don't get all the money out of there before the end of the year, the company gets to keep it. You know, look at your stock accounts. Are there some losses? It's been a fabulous year, but are there some losses we can harvest maybe? Take some of those things. So there are some things you can do before the end of the year, but really you should sit down with a tax planner before the end of the year, find out how you can take advantage of some of the code sections out there.
Yeah, because there's still time left on the calendar.
A couple months left.
Last thought, we know there's many changes potentially afoot. But for now, we plan with the law we have on the books, correct? Is that it?
Absolutely, absolutely. We know these rules are in place today, and not planning according to these rules would be silly because you're giving up huge tax breaks. And waiting to see what happens, you could lose all sorts of opportunities. You know, a big example is this whole thing, state and local taxes and property taxes. What's going to happen there? Well, you can ignore it, and you know you could get bit in the backside for it. So you want to plan today. Even though we don't know what might be in the future, plan today, take advantage of what we know today.
Maximize.
It's silly, yeah, maximize. It's silly to ignore it.
Maximize with the current laws on the books. Well, if you would like to do that, reach out to the Savvy Investor for an end-of-year tax analysis and review. Now is the perfect time to do that, as we were just finding out. You can call them at the number on your screen or head to savvyinvestor.com. We'll be back with more Midday Maryland right after this. Stay here.